Good evening. It's Vijay here. Today is Sunday, 29 December 2024. Welcome to yet another episode of Weekend Market Mirror. Here we discuss about what happened last week, what is probably going to happen next week and beyond. Now we are at the end of 2024. 2024 was a very exciting year in sorry in more ways than one. It was also the year when the markets took off till around July and then started drifting down slowly. And then the Nifty made a new high in end September and then started a multi-month sell-off. Now the fear is that 2025 will be worse than 2024. So let us see what the mood is in the market right now. If you look at the people who are talking about the what do we call the gurus or the people who manage large mutual funds, they are all talking about 2025 to be one of the toughest years to manage money, especially in equity, and they are also walking the talk. If you see here in 2024, mutual funds cash pile actually rose by about 70,000 crores. It has gone to 1.8 lakh crores. Now, when I say mutual funds, it also includes debt, balance, all kinds of funds. So if you take only equity, which I didn't get the data, it is extraordinarily high. So this talk of this overall cash allocation going from 4.36 to 4.98 percentage, it cuts across all funds. If you look at recent pronouncements, PPFAs has talked of their highest cash holding at 21.5%, highest cash holding ever. And there are quite a few funds who are also talking of 20 to 30%. And if you look at the PMS, people are talking about between 30 to 80%. So 80% cash they're holding. And then there is recently an interview of one PMS manager on the CNBC where he talks of holding 100% in cash. Now, as an investor, we should begin to wonder, if we give our money to experts and if they are going to put it in cash, then why should they ask money from us in the first place, and why should we give them? If we believe that they are better at identifying opportunities, then we should expect them to be invested at least 90%, if not 100%. Normally, equity mutual funds have about 5% or less than that in terms of cash. It looks like here the average mutual fund is having about 15% cash as far as equity is concerned. And there are large mutual funds which are looking at much higher than 15%. So that is where the situation is. You see, the people are supposed to manage our funds have all got scared. Now, one of the let's say bulwark of the bull market, or one of the conditions of a bull market, is people should be bearish or cautious. Then and only then will the bulls have legs to run, because the market doesn't care who the fund manager is or who the investor is and what kind of money he has got. So long as he's not invested, then we know that there will be something called FOMO which will happen, and the market will see to it that he will be proven wrong. The markets will only go higher, or at least they will stay in a sideways range, frustrating the person who's got cash to deploy it sooner or later, and then the markets may fall. But that is how the nature of the markets is. I just have a look at some of the big fund managers. For instance, we have this Kotak Mahindra, head of Kotak Mahindra, who expect Kotak Mahindra Asset Management, large fund. I talked of PPFAs. Here's another Nilesh Shah, who talks of equity may not deliver the 25 to 30% compound returns. Investors have become they should temper their expectations from market in 2025. So basically, he's being very cautious. He's not bearish, but he is very, very cautious. Then, if you look at another fund manager, I'll just share another one with you, which was here. So this guy, Jaipuria, Jyoti Vardhan Jaipuria, is a veteran. He talks, do not have high expectations. Again, a cautious stance. So if you really look at various people, they're all talking about across the board. If you really look at it, they're all talking about, somebody's talking of India's stock market bubble coming soon. This was about some time ago, and now he thinks that the bubble has started. So generally, people are cautious. That is very, very clear. So let us try to analyze whether there is markets are overbought or oversold. So when will you be cautious, or when will you be in cash when they believe that the markets are highly overbought? So let us look at Nifty, for instance. So if you take Nifty, see, if you look at it purely technically, so this is beginning of the year till now. Nifty has actually gone up only 9.5% in this entire year as we speak, as of Friday. If you take between 1st January of 2024 to now, Nifty has reported only 9.5% return in terms of prices. If you look at Bank Nifty is worse. It's only 6.5%. And if you look at the technicals, RSI, it is not overbought. Same thing in Nifty. RSI at 46 is certainly not overbought. Anything above 70 is overbought. So when it reached above 70 in September, it has started after that falling. Now it has gone below the 50% range. So this is Nifty below 50% on the RSI, and Bank Nifty at just 50%. So 9.5 and 6.5. Just keep this in mind, and let us see what the Nifty stocks actually performed in terms of the earnings. Let's take the earnings per share of Nifty. If you take earning per share of Nifty, you will see that the earnings is about 1086. What is the PE? 21.9. If you look at PE when the last peak happened, that was in October 2021, the Nifty PE was 28. In the past also, Nifty PE has peaked out at 28. However, it is not strictly comparable because at that point of time, it was on a standalone basis. Now it is a consolidated basis. So even if you take on a consolidated basis from where NSE is calculating since April 2021, we had a peak in October 2021 at 28. So at 21.9, I wonder how would you call it as a overbought. So let's look at this year. What has happened to the earnings per share? Earnings per share in the beginning of the year was 936 here, 936, 937, and then it has gone up, and then it is now sitting at 1086. So between 936 and 1086 is a 16% rise in the earnings. So when people talk of earnings are not good this year, in a calendar year 2024, we have had an earnings per share growth of 16%, whereas the Nifty has gone up only 9.5%. So which means earnings have grown faster than the Nifty prices. Generally, in an overbought market, earnings lag the prices. Here, earnings are leading the prices despite the narrative that there is the earnings are not good enough. Now, if you look at Bank Nifty, for instance, okay, let's look at Bank Nifty. This is more India. So Bank Nifty earnings per share is about 3,673. That is the earnings per share as on December 27th. So P ratio in Bank Nifty is 14. So I've been mentioning that it is a decadal low PE. Forget about decadal low. Let us look at what happened in the beginning of this year. Again, the green line here. You see the green line here has now actually crossed over the red line. So Bank Nifty started with the 2,915 was the earnings per share on January 1st, 2024. Today, the earnings per share is 3,673, which means there is a growth of 26%. And how much has Bank Nifty grown in terms of prices? Only 6.5%. So that is where we are. There is a sort, a fear built in, which says that the market is extremely overbought, and therefore the markets can come down significantly because of the overbought position. So I have explained clearly that there is no such sign that overbought is there where one has to be scared about. Now let's look at all the indices. The same thing if you look at it. If you take Nifty Junior also has not done anything great, really speaking, though it is much better than what has happened in the Nifty. CNX 500, the broader market also, if you see, it has not really done too much between 19,629 to 22,000. That's on 3 instruments, nearly about 6%, 6 to 7% only. It has gone up. Same thing with mid cap. Mid cap looks like as if it is highly overbought, but again, their mid cap also has done well as far as the earnings are concerned. So that is also the, if you look at the technicals, the RSI is still, this is a weekly RSI. Weekly RSI is much better than daily RSI. So you are at the 50 level, small cap or even micro cap. See, none of them are in an overbought position as far as technical analysis is concerned. Even pharma, which is one of the best performing, is still at around 60 to 61. It has not reached the higher band, this higher band above 70. IT went up above 70, now it has come back to 59.5. FMCG is, of course, the worst, which is at 41. And FMCG companies have not done well, so they don't deserve. Auto index also has not done well, but auto stocks have done, auto sales are good for this quarter. So as we go into 2025, lots of people are already decided as to what 2025 will be. My experience of the last few years has been, I also used to love to put some numbers as to our even things what will happen to the market. I realized, especially 2024, after 2024, it has actually my thinking has become much more clear that we are in fact not able to predict the market on a day-to-day basis. Point number one. Yet we do day trading, trying our best to somehow eke out some money. The second thing is we are not able to predict for a year. We can at best predict for 3 months. So the next 3 months is what we have to look at. Now, you go back to 2024 early. If you look at 2024 on January 1st, there was a clear indication that the market will be dominated by elections, and yet the market moved up. The market did move up to higher than what it started by June, July. In fact, it went and peaked out in September after the elections and before the US elections, after the Indian elections and before the US elections. So one cannot really predict what will happen, say, 6 months before. When we were in January 1st, we could only sense that some elections are there due, so there could be volatility. We didn't know about what will happen in the monsoons, for instance. So nothing we know really for us to move there. So I am not making any great predictions for the year. All I can say is that the immediate predictions are that Donald Trump is going to take over as the president. And whatever I've studied about Donald Trump, and I believe me, I've studied quite deeply of the first term and second term. In my opinion, in the second term, he will be a friend of the markets for at least 3 months. For at least 3 months. So I expect the markets to move up, at least the US markets to move up significantly after he takes over. Now, how much will Indian markets move up? I don't know. But I think Indian markets also may not be under severe pressure, because today the fear is that Donald Trump will come and do something bad for the equity markets. He will do something bad for inflation because he's going to increase tariffs. Based on what understanding I have of Trump, I don't think he will do either, because his team are all pro equity markets, pro inflation. In fact, Donald Trump himself is looking at lowering inflation. So I think he will take measures which will, help inflation to be cooled down. He will also reduce corporate taxes, which will be beneficial for global equity markets. And I think India also will get the benefit of it. Closer home, I think the government has realized that the middle class is suffering, and there are trial balloons which are talking of a 15 lakh, up to 15 lakh tax exemption. I don't know whether that will happen, but at least the government is realizing that they are putting the middle class is under pressure. So therefore, expect some good things in the budget. So there will be, I do not expect anything negative in the budget for the equity markets. On the other hand, we may expect some positive surprises. However, I don't know about this 15 lakh business, but at least the mood in the government is very clear. It is sensing that things are not hunky dory. Therefore, they have to do something to perk up the growth. And I think they also got feedback from the CII and from chief economic advisor. Even the finance ministers realized after the fiasco of the GST that things should, they have to improve on. So net net, I believe if you look purely at numbers, purely at fundamentals, the market are definitely not overbought, clearly, because these are the numbers I have actually shown. They highly oversold? I don't know about it, but they are certainly moving towards oversold. and amount of fear is there in the market, that should help cushion the downside, and there is enough amount of cash available with the mutual funds for them to buy into if the markets were to fall down. So I don't know about people when people talk about 21,000 and below, anything can happen in the market. So I can't say it will never happen, but the probability of it going below 23,200 itself looks little difficult unless there's a black swan event, or unless the government suddenly decides that come what may, we will increase taxes in the budget. So those things can bring down the market significantly. But right now, the market has survived lakh and 40,000 crores or something of October, November selling, and it has now that it has survived that and is bounced back, and there is fear, and there is some significant buying happening at lower levels, and certain sectors are doing well, and the worst of the the slowdown seems to be over, especially in autos. We already got the numbers, and inflation, food inflation is also likely to be down, because in fact I look at what is called the top items, that is T for tomato, O for onion, and P for potato, and those prices are coming down. Even yesterday I found out that they are down, and I was given to understand in Delhi, for instance, they're down. The top index is down by about 37% in the last couple of months. So that last month, sorry, it will show up in the inflation numbers in January, which should augur well for a interest rate cut and loosening of certain, let's say, harsh measures which the government might have thought. So all this makes me feel that one should not be fearful. One need not be greedy, but there are enough opportunities in the market, because the people who are fearful are our allies for a bull market to keep going up. And I'm thinking that it will happen that way only. Let us see what happens. But whatever you do, I hope it is successful. Thank you for joining me today. Thank you.